Welcome traders and investors. This is Nandis from Dalrymple Trading. It's Monday, the 22nd of September 2025. We're here to look at the US S&P 500 along with WTI Crude Oil, which is what we normally analyze on a daily basis pre-trade. So looking at the markets pre-trading hours, we can see that we hit an all-time high of 6,600 twice this month on the 18th of September, and once again we hit that on the 20th, and then we're just seeing rejection of that level. So what we saw was obviously the markets dipped at the end of the Fed announcement last week on the 17th, and it sort of retested those lows and then bounced back higher, obviously in anticipation of future rate cuts as well. One thing to keep in mind is that, and I've said this in my prior videos, is the US economy is not always a reflection of the stock market that we're seeing at the moment, right? They don't need to be correlated. So in some sense, the US stock market is not doing all that well with weaker job numbers, possibly inflation slowly edging up again. But we're seeing those weakened numbers coming out week on week. And as a matter of fact, this Friday, the PCE numbers will come out as well. So it'll be interesting to see what the rate of that is. And it would not be a surprise to see a weakening of that, potentially, given previous track record of the actual numbers weakening over the last couple of weeks. But in saying that, though, as you can see, the market has just been rallying up to the upside, and that's why I say in my previous videos, at some point in the future, this market will capitulate, and we'll see definitely some drawdowns happening before we sort of run back up again. It's very extended from historical averages, and it's definitely, it's definitely extended. And the question is, how far can this rally go on? Can it go another month? Can it go 2 months? Can it go to the end of the year and we see a correction next year? Yet to be seen. But as traders, our view on this is basically to keep buying the dip so long as the market structure remains the same. And at this point in time, it's all pointing to a bullish direction, and that's what we're going to do. So unless otherwise proven, we'll continue to buy the dip until the stats or the figures change and we see a different market structure taking place. So looking at this in the short term, obviously seeing a pullback, to the downside. We've got plenty of support here left at 66.22. Below this low here, 6612, and obviously the low of 6500. So plenty of support levels down below. The question is, how far will we go down? Potentially from here, we bounce up, seek new price discovery. That's very much a possibility. So that's where I'll be positioning myself to buy into this once we see that weakness come in, to yet buy into it and accumulate more. If you're an investor, again, I don't know whether you want to go full in on all your money on this, because as I said, the market is very extended. So you might want to think about potentially not putting all your money into this, but a certain percentage so that you're not carrying higher risk than you need to. Your exposure is not over the top, right? Because when people see markets like this, it's coming to a top where it just keeps going high, exponentially upwards, and the wrong sort of psychology comes into the market. The euphoria, as they say in bull markets, comes in, and I dare to say that there is a level of euphoria happening here, and that's why this market is rallying up despite weakness in the US market. Nonetheless, let's move on. WTI crude oil. So looking at this, we saw the markets correct from Wednesday all the way through to today, and we saw a rally up pre-market hours. What we're seeing is consolidation, this price here, 62, 63 level, and then we should see prices push higher. Of course, they can always push lower as well. At the 62.20 is the support level. Below that, we've got 61.50. To the upside, we have 63.50. If we look at this in slightly longer term perspective from the start of the month, we can see it's sort of been a sideways market, sort of in that range from 63.50 down to 61.50, and we sort of broke above it, couldn't quite reach 64.50, and we just rotated to the downside. So the way I'm seeing this is not really a trending market at the moment. If you want to take exposure to this, just keep in mind that it's not heavily trending. I mean, depending on your time frame, but just looking at the hourly chart, which is what we're looking at, it's sort of choppy to the upside and to the downside, and it's got very strong support at 61.50. So unless that's broken, we'll continue to see prices chop in this range. If we break above 64.50, then that exposes us to higher price discovery up to 66 and beyond. But at this point, I'm expecting prices to sort of consolidate to the downside, and we push up and we retest 63.50. And then what happens after that is yet to be seen. So yeah, that's where we're sitting in the markets at the moment. Sideways action on WTI crude oil. Just making sure that your risk to reward is always calculated correctly, especially in choppy markets like this, because this grind here from Wednesday down to the end of the week was painful, right? If you were short this, you had to bear some very long trades to the upside. Like look at these candles here. They push prices to the point where if you had stop losses up here, you would have just been blown out. So it's choppy, and at the moment it's a little bit volatile, but definitely sideways. But let's see how this pans out in the next couple of days and go from there. Well, wishing you all a good week ahead, and that's all for today.